Hi, and welcome back to the First Time Homebuyer Guide. Today, we're going to talk about assets and the role it plays in a pre-qualification. So we've gone through income, down payment, and credit. And I know I've said this a million times, but feel free to follow us on our podcast as well to learn more. So why are assets needed? Going back to this visual, if you remember the down payment and the closing costs, that's what you paid up front. Assets can be used to prove that you can cover the monthly costs of an additional mortgage payment. Are assets always used in a mortgage application?
Are assets always used? Not always.
They're not always necessary. If your income's good enough or if your credit score is high enough.
Yeah.
But that being said, it's never a bad thing to include because it just gives you a stronger case as like someone that like I'm going to make my payments back and I can qualify.
If you're in a situation where it's really close, well, should we approve this loan or should we not approve it? And you have more assets, it's always going to be in your favor.
Yeah.
Yeah. So
what type of assets can be used? The most frequent one that we see is bank statements. People will send us or the lender a copy of their checking account, their savings account, whatever. Typically, the lenders are looking for 2-month history just to prove that the money's been in there. Another type of asset that can be used is a retirement account, like a 401k, a Roth IRA. That being said, if you were to actually pull money out of those accounts, there are tax penalties for withdrawing early. We're not tax accountants, but we want to at least let you know if you are going to pull money out to be aware. There's some penalties for that.
There's some ins and outs on that. We definitely have you talk to a tax accountant. I've had people do that and they have avoided the penalty, but you have to be very aware of what's needed and make sure you talk to your tax accountant about that.
Yeah. The last item is personal items. And to be honest, I haven't seen anyone use personal items. Again, the star with the bank statements, 100% of the time for what I've seen has been bank statements.
I guess I've been around long enough that I've seen all kinds of things.
I'm putting you on the spot.
So the main thing that I've seen is basically selling a car. And again, you have to be aware that documentation is very critical. We have to show that you own the car. We have to show the value of the car, a Kelley Blue Book, something that will show what the value should be. We have to show a sale. We have to show a check that you received. Don't sell the car for cash because we have to document this. It's going to go into your account and then we can use that information. But I've seen cars probably the most. I've seen jewelry, expensive jewelry. It has to be, again, we have to have it appraised. A jeweler can do that. It's very easy to do. And then the sale contract and the documentation on the check that was received and then deposited.
Yeah. And the last one, we've seen some questions about cryptocurrency. Cryptocurrency nowadays is really really easy to convert into other types of currency. And so they just want to convert it into US dollars. But yeah, you could use your cryptocurrency to prove that you have assets.
Can I make a comment on this?
Sure.
I've seen where people have built things and, they couldn't really appraise it. They couldn't really do things that way. Small amounts deposited to your account is probably not going to be questioned. But I've also seen when it's larger items where they've paid down debt and used that money to pay down debt to qualify.
Mm. And then, going back to what my dad said, everything has to be documented. I know it can be frustrating that you have to have a paper trail for everything, but that's the lenders. They want to know.
We have to prove where it came from.
When you go to someone to get a loan, they set the rules. And so you got to follow those rules.